Alright, hope everyone's doing well. So, it's gonna make this video rather quick. Main things to talk about today. First, let me do always in. So, always in long, always in short. Probably always in short on bar 1. So, traders sell the close of 1 or the close of 2. And I would not get out here. I would get out above this bar at 9:30. Gap up, pull back to the moving average. There's weakness, bad follow through after every breakout bar, so possibly two-legged pullback, and we may found buyers. Also, we had a logical buy here, so probably buyers here, scaling and lower, so they buy here, they'll buy more down here, get out at break even, and so bears probably get out here, aggressive bulls buy, or they wait for the third or fourth bull close and then they buy. And then those bulls probably get out, either below 1105 up here or below here. Small double top. So we have a double top, lower high, major trend reversal. Tight trading range, double tops, they usually lead to two legs down. So at first it was here, here, and here, possibly the second leg down, but then it ended up being, nested. So, two legs up, one pullback, two. So leg one, pullback, leg two. And usually the second leg down can be pretty violent. It's kind of like this on the daily chart. So subtle double top, higher high, major trend reversal. We thought when we saw this that it was leg one, pullback, leg two. Ended up having, pretty much a two-legged pullback or sideways, and it's possible that we get some sort of violent move down for a few days, down to this area, maybe down to the 2060 area. So that's the pattern we may be looking at on the daily chart from a subtle double top. So if anything, it's a reasonable short, 40% chance, you get this big move down. So if that's the case, it's an okay swing short below. Bulls get out, aggressive bears sell, or they sell this high, betting for another leg down. Maybe always in bears get out here. Some aggressive bulls may buy, but if they do, I think a lot of the always in bears have to get short again. So if they get out here, they probably won't sell here because of the lack of bear bars. But then when we get this, double top, they'll break up a double top to wedge. Second entry short, a lot of traders will sell here or below here, betting on the lower high from this double top. And then we sell it off sharply. However, it's hard to stay short. So bear did get short, maybe they get out over here close to the low close. I would not get out above this bar or this bar. I certainly wouldn't go long above it, but that's always tough. When you get 1, 2, 3, 4, 5, 6 consecutive bear bars or with no bull bodies, or 6 sell to close bars that are weak, usually you just don't get a lot more down, so it's hard to stay short. Key things about today. Well, here's the cash index. Pretty big gap up. Maybe some sort of 50% pullback, two-legged pullback. So, we may get back to this high close even. So you've got to think about the possibility of this being a large gap and this being a pullback. We tried to get a wedge top here and a second leg down. However, since we had to get big gap up, so big up, big down, big confusion, trading range most likely. And the reality is we don't have to test this close because, number one, it's a potential pullback in a bull breakout, gap up, and technically this was the sell to close bar. So bears sell this close, scaling higher, look to get out around this close. They got the opportunity to get out down here. So it's really the second leg down of this. We see this, we know we're developing a trading range, we get the bear breakout, and now we're forming the range. We know the bottom is in this area, we just don't know where the top is. The bottom might be down here, but we know we're close to it. As far as the top of the range, it's probably up here, but it may end up being the highs. We also had a big tail on the bottom of bar 1, and probably bulls who buy it can probably make money. So you can see a lot of bulls buy this low. They buy more here, get out break even over here. So there's a lot of things. Another thing to notice the selling pressure over here, and then notice the selling pressure here. It withered away. It's just disappearing. 4 bull bars, 5, 6 bars since here with one bear body, 3 bear bars with big tails. Bears couldn't even make a scalp, so bears have been unable to sell below a bar and make money for 1, 2, 3, 4, 5, 6, 7, about 12 bars. And then we got a wedge, double top with here, or you can call this a wedge. So 1, 2, 3. Sorry, one moment. Alright, sorry I had to pause the video for a few minutes and lost my place, so I honestly have really no idea what I was talking about just then, but I know I covered all ways in. Bears sell, bulls get out above. Bears get out above, bulls go long. Aggressive bulls buy above this bar, stop down here. Don't get out here. Bears might have sold at this bar. They would have sold at this bar closed on its low. It's more confusing. If this bar would have closed on its low, it's tough. Maybe bulls would get out below it and wait, and bears would wait for 3 consecutive bear bars or a bear breakout. That's probably what I would do. So, for me personally, I would have sold bar 2. If I was trading always in, I would sell bar 2. I'd get out above here or on this close because we're so close to the moving average, and we hit my target high of yesterday, which is the gap up in the pink line. I'd buy the 3rd or 4th bull close. If I didn't do that, I'd buy somewhere down here. If I was lucky, I'd probably buy the 3rd or 4th close. Stop down here. I would not get out here because of the bull breakout and my expectation of that we might reach this low. So I'd still be long, and this isn't enough to make me get out of a long. Here, I may have reversed a short. I would have definitely gotten out of a short below this low right here. So I would have gotten out below this low if it closed on its low. I might have gotten short. Realistically, I probably would have waited for 3 bear bars or some sort of bear breakout to test this low, but we didn't get that. Then with the big tail on the bottom, I probably would not have. I would probably have long, just because it's not a great short and it's a pretty tight channel. As you can see, the bears have been unable to make a stop entry short, and then we just went all the way up to here. We hit my target, the low bar 1. We're testing the open of the day. So if I didn't get out here, I'd definitely get out here, and I'd sell below this bar. And actually, I made a mistake today. I actually sold below this bar and got out above here, and that's okay. That's not the mistake. I didn't get short again here, and that's kind of what I was just talking about with the daily chart. So many times. This is a very reliable setup. Al talks about it all the time, and just look back on his weekend updates. You get a double top, and you get a leg down. You expect 2 legs down. You get the first leg, pull back, and then you get a second leg. Well, very often the second leg's more of a panic, and a lot of times you get what looks like the second leg, which ends up just being a pullback, and then a more violent leg down. And one more thing to note. Notice here. So I said, I did say that the bears didn't have a chance to get out here, but arguably, those bears sold here, so they really didn't need to get out, which is true and all, but at the same time, the problem with that is usually if you do something reasonable, the market will let you out. So kind of like, I think it happened yesterday, or it was over here. So bears sell this close, and this is a more reasonable short than arguably here, but bears sell here. they sell more somewhere up here, maybe below here, and they get out over here, or they sell here, get out, sell more up here, get out over here. And you can see it took a long time. It did not actually let them out, but it probably did on the Globex. Let's see here. So here's the ES. Nope, still haven't let them out. Wouldn't be surprised if it did though overnight. So, and we hit the 60-minute moving average finally. Right here. Alright, so daily, where do we go from here? Well, daily chart setting up second entry short, and don't be surprised if at any point the bulls and the bears decide that we're going to get down here, we're going to vacuum down. So we may quickly just melt down here just really fast in a couple days, or possibly, and if we do that, we may get down to here even. So don't be surprised if that happens. But really not a lot to say. I think I've covered most of the points I wanted to cover. As far as over here, again, for those of you that have purchased owls, of course, in the past, or for those who have purchased it, you have access to Al's new slides. Go to his buying and selling pressure and study it. Look at slide 25. It's around there, and just look at this day and look at the buying and selling pressure. 5 consecutive bull bars, 5 consecutive bear bars, 6 bars, 5 bear bodies, 1 bull body. Probably sellers above. 3 bars down, but again, up here is a target, so we may find, we may get up to here. 4 consecutive bull bars. Arguably 6 bars without 6 bars total with only 1 bear body, so probably going higher. Big tails on bottom, bull bars closing on their lows. Only 1 bar here, 2 bull bars, closing near their highs. We're closing above new highs. Bull bars getting less frequent. Now we have quite a few bear bars without any bull bars, and only 3 small bars here for bulls. Stuff like that. And if you watch it a few times, you'll get what I'm understanding. And you probably already do, but it's just something that's worth watching. Alright, comment below if you have any questions, and thanks for watching. Hope you have a great evening.